Welcome to the weekly market wrap-up. I'm Hannah Bernard. Continuing over from last week, U.S. major indices recorded mixed performances, with the Nasdaq the only index to trend positive. However, Canadian markets fared much better. Let's get to it. U.S. markets fought to recover late this week after suffering a deep dive on Tuesday. While regaining some ground, volatility prevailed, with the Dow dropping 62 points and the S&P 500 dropping nearly 3 points on Thursday. The Nasdaq did manage to edge up, closing at 4,218. The greatest concern for U.S. markets is, of course, the Dow. Thursday's 62-point drop continues an overall declining trend, and an opening streak of losing days such as we are experiencing now has not occurred since January of 2008, which has led to many investors starting to worry. Canadian stock markets fared much better than their neighbor to the south, as the TSX hit a 2.5-year high on Thursday, up 59 points to 13,831. The TSX Venture, however, did not follow suit, closing down to 974. The surge in the TSX is mostly due to a bullish forecast from the World Bank on global economic growth. The Toronto Stock Exchange's benchmark index has now gained in the last 7 of 8 sessions, mostly credited to a recovery in the mining sector. Huge news out this week with the collapse of Best Buy. Shares plunged over 28% Thursday after news of weak holiday sales. Best Buy aggressively discounted prices to compete with the likes of Walmart, squeezing margins in a failed effort to boost customer demand. To put the drop in perspective, Best Buy lost $3.6 billion in market cap in the drop, ending what looked to be a bullish turnaround for the stock. In 2012, Best Buy was one of the worst performing stocks, down 49% for that year. But it became one of the index's best performers in 2013, soaring 239%. Shares have now erased all of their gains over the last 6 months, and this is causing concern about what this might say about overall consumer confidence as poor holiday retail sales numbers start rolling in. Let's turn now to currencies. The U.S. dollar index was under pressure early as several global markets responded negatively to the Labor Department's jobs report, which came in well below expectations. However, the greenback managed to gain back most of those losses as positive economic data balanced the overall discourse. The dollar-yen pair took a hit on Monday, which culminated in a massive 500-point sell-off in the Nikkei 225. Although rates did trend positively midweek after the U.S. Producer Price Index reported 0.4% growth. The euro currency experienced some volatility midweek following slightly disappointing GDP data from Germany, although the DAX did manage to leap to new record highs based on speculation towards German cyclical industries. Now to winners and losers and our picks for the week. The winner for this week is Tesla Motors Inc., ticker symbol TSLA. Shares are up 16% for the week as Tesla CEO Elon Musk helped to calm investor fears following a recall action concerning 29,000 charging adapters for its 2013 Model S electric cars because of a potential fire hazard. Delivery of the aforementioned Model S was much higher in the fourth quarter than previously estimated, and the company plans to double its services and sales centers in 2014, news that has counterbalanced some of the negative press affecting Tesla in recent weeks. The loser for this week is Nu Skin Enterprises, ticker symbol NUS. Shares dropped nearly 27% on Thursday after the People's Daily newspaper, the official paper of the Chinese Communist Party, accused the company of being a suspected illegal pyramid scheme. This is not the first time the accusation has been leveled at Nu Skin, which employs a multi-level marketing strategy, but it also has legal implications internationally, where direct selling comes under tighter restrictions than in the United States. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. On Tuesday, Delta Airlines. Delta Airlines will hold a live conference call and webcast to discuss its December quarter 2013 financial results Tuesday morning, with an EPS estimate of $6.03. Also out on Tuesday is Baker Hughes, which releases an EPS estimate of 84 cents. Earlier this month, the oil field services company reported fourth quarter revenues of $80 million, or 18 cents, severely cut into by a disruption in its Iraq operations. Netflix, one of the darling stocks of 2013, is up on Thursday with an EPS estimate of 65 cents. Checking in on Canadian stocks to watch next week. First up on Monday is Celestica Inc. with an EPS estimate of 23 cents. The technology whiz reported third quarter revenues of $1.4 billion, 5% lower than the same quarter the year before, and cash flow totaling $10.4 million compared to $59.9 million for the third quarter of 2012. And finishing off the week is Open Text Corporation out on Thursday with an EPS estimate of $1.51. Last week, the Waterloo, Ontario-based company announced it has completed its acquisition of GXS Group, expanding Open Text leadership in business-to-business integration services. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Crush the Street, and BayStreet.ca, I'm Hannah Bernard.